Wall Street once called Bitcoin a joke, a bubble, a scam, an asset with no future. Some of the world's biggest financial institutions warned investors to stay away. They said cryptocurrencies would eventually collapse under their own weight. But something remarkable happened. Those same institutions are now investing billions of dollars into the very market they once dismissed. So, what changed? Did Wall Street suddenly become a believer in Bitcoin? Or did it realize that the biggest financial opportunity of the decade was impossible to ignore? The truth is far more fascinating than most headlines suggest. Behind closed doors, the world's largest asset managers aren't arguing about whether crypto will survive anymore. They're asking a completely different question. How can we position ourselves before the rest of the financial system catches up? Just a few years ago, crypto looked like a risky experiment. But today, the data tells a different story. Look at BlackRock, the world's largest asset manager, now overseeing over $10 trillion in total assets. Their Bitcoin ETF has shattered records, attracting billions in inflows in record time. And they aren't alone. Publicly traded companies globally now hold over 350,000 Bitcoin on their balance sheets, worth tens of billions of dollars. But here's what almost nobody is talking about. This isn't just about Bitcoin prices. Behind the scenes, major banks are quietly testing private blockchains for internal settlements. They are moving away from public decentralization toward a future where they maintain control but gain the efficiency of the blockchain. They are building a parallel financial system, and they are doing it with your permission, using technology that was once meant to replace them. This creates one of the biggest contradictions in modern finance. The technology that promised to remove middlemen is being utilized to make them faster, leaner, and more powerful than ever before. And then there's the debate about altcoins. While institutions prioritize Bitcoin for its scarcity, they are increasingly researching smart contract platforms like Ethereum and Solana, not for hype, but for tokenization. Larry Fink has famously stated that the tokenization of all financial assets is the next big wave. Imagine stocks, bonds, and real estate all moving on-chain. That is the infrastructure being built right now. The crypto market is growing up. The era, driven entirely by retail speculation, is giving way to an era defined by institutional infrastructure. Volatility isn't disappearing, but the players involved have fundamentally changed. Experienced investors aren't asking where Bitcoin will trade tomorrow. They're asking, which networks are attracting real institutional development? Which companies are building the backbone of this new system? Wall Street is no longer watching crypto from the sidelines. It has stepped onto the field and is changing the game from the inside out. Now I want to hear from you. Do you believe institutional adoption will make the crypto market stronger? Or do you think Wall Street is slowly taking control of an industry that was created to exist without it? Share your thoughts in the comments. If you enjoyed this analysis, don't forget to like and subscribe. In our next episode, we'll break down how billion-dollar firms actually build their crypto portfolios and what lessons you can apply to your own strategy. The biggest question is no longer whether crypto will survive. It's whether you'll recognize the transformation before everyone else does.